Welcome to Financial Issues, where we join reality with truth, helping you make the most of your money by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
Good morning. Welcome to Financial Issues. I'm your host this morning, Shana, and our phone lines are open. You are listening to Financial Issues. We're a ministry that looks at financial issues through a biblical lens. So our focus is on stewardship. We believe that God owns everything, and we want to help you be good stewards with everything that God has trusted you with, especially in the way that you invest. So phone lines open, 610-363-1110 is the phone number to get into the call queue, and you'll be the first caller if you get in now. So one of the things that we do at Financial Issues is to help you stay in the know about the financial issues of the day. We help keep you abreast of what's happening in the economy and the markets, and we help you understand how that impacts your own personal financial issues, specifically as it relates to your investments. So I've got quite a few takeaways from this week. It was a pretty hefty financial news week. We'll start with housing. The average 30-year mortgage rate in September plummeted all the way down to 6.15% in September. It's now back to closer to that 7% range, which is not great. But the lower September mortgage rate gave a much-needed shot in the arm to the sickly housing market. The woes of the housing market has been caused by a 50% post-COVID increase to the price of houses. Housing prices have risen 50% since COVID, the end of COVID. We've also had a doubling, in some cases more than a doubling, of mortgage rates. So pre-COVID, we saw rates down into the 2% range. 2.85, I believe, was about the lowest average. We're now sitting, we got up to almost 8. We're now sitting at 6.7 or so. But September saw a little bit of a reprieve, and home buyers stepped back into the market. According to the National Association of Realtors, in this week's pending home sales figure, we're told that sales rose 7.4% month over month, well above the 1.9% increase that was expected. Sales were up 2.2% year over year. So you can see kind of the bigger picture there, at least for the last year. Since home prices are not budging much due to inventory shortages, any easing in mortgage rates has really helped to move the needle in terms of affordability right now. That's why we saw that increase in September. With the rebound in mortgage rates, it would make sense that October would see a reversal of this rebound in home sales. On the inflation front, the PCE inflation stats for September came out just this week and came in much as expected. So PCE comes out after the CPI and PPI reports, and PCE is the Fed's preferred gauge of measuring inflation. Headline PCE, which includes everything, was up 0.2% month over month, and the core rate, which excludes food and energy, was higher by 0.3%, mostly due to persisting higher cost in rents. And the August number was revised up by 0.1% to a 0.2% gain, painting a little bit of a worse picture than was originally reported, as has been the trend. Bringing year-over-year numbers for inflation to 2.1% and 2.7%. 2.1 for headline, 2.7 for core. Lower energy prices helped to keep a lid on the top line, partially offset by another gain in food prices. Services inflation continued to push higher, somewhat canceling out the little bit of deflation that we saw in some goods prices. Personal income and spending also came out this week. It also supports the narratives that inflation continues to hurt us, and now and in the future, as we spend more of our income just to keep up with prices. Therefore, we have less money to save, worsening the prospect for our meeting our future financial goals. Income growth was forecasted to be up by 0.3%, while spending was up 0.5% month over month, 1/10 above expectations. Spending growth was evenly split between goods and services, according to this number. The savings rate consequently dropped to 4.6%, which is the lowest since December of 2023. For low-income earners, they have less because they have to spend more just to keep up with today's prices. And for higher income earners, hefty returns in the stock market, the stock market that's gone gangbuster over the last couple of years, causes them to invest a little bit less because they get more return from the money they already have invested. Jobs are the biggest news this week. That was a highly anticipated number, and we've had several numbers come out just this week. No change in the trend where the rate of firings as measured by the jobs number is muted because hirings have slowed. The Challenger job cuts data for October came out earlier this week, and they fell by 24%. Sequentially, they were up 51% year over year. This is what they said about it. Job openings have fallen and hiring is pretty flat at the moment. Companies appear to be in a holding pattern as we await election results and the potential regulatory and market environment that follows. So we're not the only ones waiting to see what's going to happen with the election for a number of reasons, for financially, for our personal liberties, for the future of this country. October, we also got this week the October ADP report, and it did not offer much clarity as to the direction. It muddied the waters a little bit more because it has a different approach to the treatment of temporary layoffs than the BLS, the government numbers do. In the JOLTS report, the September job openings and labor turnover, that's the JOLTS survey, told us that there were 7.443 million job openings in September. That was nearly 600,000 below the initial August estimate. The hiring rate picked up a little bit. Separations and quits were little changed. This tells me that people are sticking with their current jobs because it's not so easy to find new ones. Again, we see some inconsistencies between the ADP and the JOLTS data, specifically in the area of small businesses, and this has been the fly in the ointment for so many of the jobs numbers that we've talked about sort of ad nauseum. But small businesses really have taken it on the chin. We've got a chart here, if we can get that up on the screen, guys, a chart to give a visual picture of what's happening to small business community since COVID. So what you see there on the screen, small business employment is the bottom line, the one that has that steep drop off there. During COVID and post-COVID, during the rate hiking cycle, because rate hikes hurt the small businesses much more than they do mid and large-sized businesses. This kind of stalled out. The decrease in employment in the small business community kind of stalled out during the interest rate pause, and then it took another leg down here recently. So I'll tell you, the BLS didn't see that coming. That's what they're kind of pinning their underestimating of the weakness in the job markets and that big revision that we saw earlier this year. But perhaps they will get a sudden, more accurate revelation of the health or the sickness of the small business community after the election. I suspect that they will, that all of a sudden that these things will come into clarity for them, and the blame will be misplaced on the incoming administration, which, most are expecting a Trump win. But don't be deceived, folks. look at the trend line. It did not happen overnight, just like the turning off of our economy for COVID did. So bad policy takes its time to work through an economy as big as ours. When the economic numbers actually turn negative and the narrative surrounding those numbers actually turn negative, it's because they finally buckle from the weight of bad policy. Bad policy that has been shoved down our throats by the current administration. So what is coming is owned by the current administration. Make no mistake about that. Well, there's a lot more news that came out that we had time to get to in this first segment. Maybe we'll pick up there if we don't have any calls. Number 610-363-1110 is the number you call to get in our call queue. Do it now.
Pharrell came to Crossroads as a fourth grader. His name had been brought to my attention by the school principal. She was concerned about the direction he was heading.
I remember I wasn't the best kid. I got into trouble a lot.
He became a very active part of Crossroads Kids Club.
Mr. Engel, he was the leader that really impacted my life in so many ways. I honestly didn't want Crossroads to end.
We would invite all the students to come to our youth group here at Waterfront.
I felt God saying, come on, come to me. It felt like I was set free.
And I'll never forget the day when we had the privilege and the honor to baptize Pharrell.
I hugged Mr. Engel. I don't know if he understands. I'm truly, thankful to have him through the whole journey. If it wasn't for Crossroads, I probably wouldn't be in the place that I am right now. I wouldn't be a follower of Christ.
Help reach more kids like Pharrell with the hope of the gospel. Visit reachOurSchools.com.
There are moments in life that define us. Choices determine the courses we take. Choices that create life, or those that save a life. And some make life worthwhile. There are decisions to stay or to go, to remain the same or to grow. Sometimes we pray and make peace. Other times we take a stand for what we believe. In celebration, mourning, triumph, and defeat, we are invested in every decision we seek. Despite differences, we have one thing in common, the desire to do all for the glory of God. Keep your wallet aligned with your heart and your investments in harmony with your faith. Timothy Plan, biblically responsible mutual funds, ETFs, and retirement plans. Before investing, carefully consider a fund's investment objective, risks, charges, and expenses contained in the prospectus available at timothyplan.com. Read carefully before investing.
Welcome back to Financial Issues. I'm your host, Shana. Today's Rapid Fire Friday. If you've got some questions for us, get your call queued up now. 610-363-1110 is the phone number to call, and you'll still be the first person in the call queue. So we hope that it on Rapid Fire Friday, we'll get to as many of your questions as possible. Try to keep your questions short, pithy, to the point. I will try to do the same with my answers. A lot happening this week in the financial news. Didn't quite get all of it jammed into the first part of the show there as I would have liked. So I got a few more thoughts that I want to share. In parsing through some of the job numbers that have already come out. Now, all of them have come out, some right before the show started just this morning. But looking at the job numbers, the sectors that are really benefiting from the sectors of construction and manufacturing, and those really have to do with industrial policy. So think government spending is what is keeping this economy alive. So we've seen job growth in the private sector diminish, employment in the small business sector really hurting badly. With small businesses, failing at a much higher rate than usual. They rely on access to capital markets through the bank channels more than large companies do. Large companies can issue stock, they can issue debt. Small businesses really are dependent on going to that, a lot of times a regional bank or a big bank, and getting loans to finance their businesses, getting the capital that they need. So it's really government that has kept this economy moving along, and you don't typically see that kind of government intervention when the economy is as strong as we've been told that it is. So there is the Beige Book also came out recently. The Beige Book is kind of a compilation of the Fed's different districts and the surveys that they take. They ask, their districts all around the country how things are going. And what they said was that the demand for labor was relatively soft. That means companies are not, don't have as many job openings. They're not hiring as much. We also got the weekly jobless numbers come out this week. Initial claims fell to 216,000, 14,000 below what was expected. I'm not sure, and we're not really sure yet, what the impact from the recovery of the hurricanes are still having in certain states, although we did get a little bit of that data out this week. But if you smooth out the volatility, the four-week moving average for unemployment claims fell to 237,000 from 239. Now, this is still above that 218,000 sort of level that we had been stuck around for a little while. Continuing claims also fell to 1.862 million from 1.888 million. Initial claims spiked early in the month before reversing. However, continuing claims have continued to climb to a 2-year high. So the steady decline in the job finding rate, again, not that many jobs out there for people to get, is likely the expectation. Non-farm payrolls, which is the number that came out just this morning, haven't had time to really dig into those numbers yet, but the Bloomberg consensus for what was expected, we were expecting to see somewhere around 100,000 or more total job gains, but what we ended up seeing was 12,000. So the market's not spooked by it. I mean, I guess it was pretty well telegraphed, and the expectations were well set that, we've got these strikes going on in California and in Hawaii and at Boeing, and we've had the impacts of Hurricanes Helene and Milton. So I guess the markets were not really spooked by a 12,000 print. Hopefully I'll have time to dig into that a little bit more over the weekend and maybe give some more thoughts about it next week. So the markets so far this week are maybe turning around now based on what's happening in the pre-markets. But this week, the NASDAQ composite plunged 2.8% yesterday in a brutal sell-off sparked by rising AI expenses. So we've had a lot of tech companies report their quarterly earnings this week. So far this week, prior to the open of the market on Friday, the S&P is down 2.3%, the Dow down 1.4%, and the NASDAQ down almost 3%. Looks like we may see a little bit of a turnaround, but hey, it is really early in the day. Bigger week next week than what we saw this week. Of course, we have the election on Tuesday. If you have not been out to early vote, we suggest that you do that. Get out. If early voting is still going on in your neck of the woods, get out there and do it just to make sure that your vote is counted. And if you haven't, get out on election day. So, Seth, I know we have a picture of me with my voting sticker when I went to vote. I don't know if we put it out on social media yet. Well, if you see that on social media, if you do that, help our ministry get more traction. We want you to share your picture with your voting sticker. So we want to know that you voted and that you voted your values. So interact with us there. That would be a great thing to do.
Absolutely.
And so the election, I really hope that we know on Wednesday morning that there's a clear winner and a clear concession in the election. I don't know that we will see that, though. It's going to be an interesting week. I know we're all on pins and needles. I know that we as Christians are not anxious because the scriptures tell us not to be anxious, to trust and to know who is in charge. And then, of course, we will get the next Fed interest rate decision after the Fed's 2-day meeting. The FOMC meets on Wednesday and Thursday next week, and we'll get that decision out on Thursday. There is, after the reporting of all the jobs data and the inflation data this week, there is now almost a 99% expectation that we'll see a 25 basis point rate cut next Thursday. Now that you're in the know about the recent and upcoming financial issues, we hope that you're going to learn more about how our ministry can help you integrate those issues into your own stewardship. Find out more about how we can help you defund darkness with our biblically responsible investment strategy by going to our website, financialissues.org. You can learn about the way that we help our partners invest through the asset allocation models that we offer, and then the buy list, which we know that the sell list has been on the large side from a historical perspective compared to the history of this ministry. We've done that to try to get you to increase your cash holdings ahead of the election. We've been very the additions to the buy list have been very sparse. We expect that to pick up a bit after the election, after we get direction on where the pockets of opportunity are likely to be. Our stewardship verse today comes from Romans 12:12. Rejoice in hope, be patient in tribulation, be constant in prayer. Seth, you want to expand on that?
Yeah, I'd be glad to, Shana. This is a good verse for us this week. Every Christian must possess this quality all the time, steadfast patience, but especially this week as we're waiting the results of next week's election. I think there's great value, Shana, in putting your head down, so to speak. I'm not saying that you dig your head in the sand necessarily, but putting it down and just steadily waiting on the Lord for his timing and his provision. He will provide for his people. And so let's exhibit that. Godly patience in our lives, remembering how perfectly patient God has been with us. He's exceedingly patient with us.
Absolutely. You know, there's great wisdom in this scripture. There's great wisdom in every scripture. But, you know, since we're talking about this one today, you know, we know that patience is a godly virtue. And we know that we are told to pray without ceasing because we need help with every issue that we face in this world. Because this life is not smooth sailing, as many of us can testify to. But how we exhibit patience and how we pray while we're waiting for God's answer or his intervention is crucial. So we're told here to do it with joy, not fear or anxiety, but with joy. We can only do the hard task of waiting and praying joyfully because of the hope, that confident expectation that we have that God is good, that God is powerful, and that God loves us and he's working on our behalf.
Well said, Shana. You know, speaking of both those topics you were just mentioning, actually, when you talked about having cash and being patient as well, we got a partner question that speaks to that. So this is from Melody saying, I've recently had to sell several of my stocks according to your sell alerts, and I was already over my cash holdings. Now I'm wondering if I should just hold until after the election to work on my allocation. And I'm also a little confused when you say invest only new money. I don't think this cash is what you consider new, but my allocation has lots of holes in it right now. Shana, what insight would you give for Melody and for any other partners who might be wondering this about cash?
Yeah, so typically when we talk about new money is money that's added to your portfolio that you didn't have before. So the sales are not necessarily new money. So new money comes either from income, you know, when you're adding money into your portfolio, could come from the sale of an asset that was not previously part of your portfolio. So if you sold a piece of real estate or, you know, maybe you had a big, huge garage sale or estate sale and sold a bunch of stuff. If you got an inheritance, if you got an insurance settlement, that was money added into your investable portfolio, that's usually what we call new money. Now, this suggestion to stay heavier in cash applies to all cash, to all whether it's new money or whether it's cash that's been generated from the recent sales. So
yeah, no, that's good. And then just to kind of close here, Shana, any insight you have for partners who maybe feeling like Melody is, there's not much they can do right now except sit and wait?
Yeah. So we have a little bit of the hindsight of picking our scripture after we know what the question's going to be. So I would say that was picked specifically for this. Don't be anxious. Don't be fearful. Don't be resentful about the things that God hasn't decided to reveal to you yet. But be joyful that God is on the throne, that he has a good plan, whether he shared it with us or not, and just focus on prayer. We can start by praising God for what he has already given us, and then we can wait patiently, listening for his guidance and his direction. Well, folks, if you listen on a station that only carries the 30-minute version of the show, we have to wish you a farewell. If you want to get the full show, make sure you go to financialissues.org/live or get our phone app. That way you can catch every show for free and stream it when it's convenient for you. For the rest of you, stick around. We'll be back with more financial issues right after this break.
Noah surrendered to the radical call to build an ark. Abraham had to leave his friends and family and the place where he lived to experience what God had for him. Both Abraham and Noah had a choice to be obedient. Will you abandon investments in your portfolio that support abortion, gambling, and pornography? Learn how you can invest biblically and abandon investments that dishonor God. Become a Financial Issues partner today. Go to financialissues.org/join to learn more.
Hi, this is Shana Bird, the host of Financial Issues. The Financial Issues family is so blessed to have saved tens of thousands of babies, all thanks to the generous support of you, our listeners and viewers. For $140, you can sponsor 5 ultrasounds. Please go to preborn.org, that's preborn.org, or financialissues.org and click on the Preborn logo. Save a baby, save a life.
Gain valuable insights from partners sharing about financial issues.
We work so hard, all of us do, to get this money, and I knew nothing about how to use it appropriately, biblically. And the strategy is so simple. You guys are on the front line of the battle.
My wife and I have been partners with you for several years, and we have benefited greatly from your advice and your ministry.
I do nothing without following FISM's advice on stocks, and especially since it's coming from a spiritual foundation.
You are amazing. Nobody is doing what you are doing for the body of Christ. I just wanted to call and thank you for the advice that you gave me a little over a year ago. It has panned out very well.
I never dreamed I'd be able to give money like this.
Become a partner today by simply going to financialissues.org/join. Click the green button to become a partner today.
Where's Mima? We found out Shepard's diagnosis when I was about 17 weeks pregnant. We learned that he was going to need a series of surgeries after he was born in order to give him what they considered a normal life. And we weren't sure how this worked.
Yeah, very emotional, very, very broken. And as my wife just said, not sure how this worked. And called Samaritan, and they said, you just go have that baby. You leave the rest to us.
And just to hear the confidence on the other end of the phone of this is not something that you need to be concerned about at all. You focus on the health of your family, the health of your baby, and we will walk with you every step of the way.
Securities offered through G.A. Reppel & Company, a registered broker-dealer and investment advisor, member FINRA and SIPC. Opinions expressed by Shana are hers alone and are for informational purposes only and do not necessarily represent those of G.A. Reppel or the outlet on which you are listening. You should consider how the information applies to your situation prior to personally implementing it and consult any financial professional you work with to make sure it's applicable to your financial plan.
So glad that you're still with us here at Financial Issues. I'm your host, Shana Burt. Our phone lines are open. I see that we're starting to get a call in the queue. We still have plenty of room, though. 610-363-1110 is the phone number. If you want to get your call queued up, you'll need to do it now because we're halfway through the show. So we want to know what's on your mind. So we talk a lot about investing here on Financial Issues because that's one of the things that we do. When you're a member with Financial Issues, when you're a partner with us, you get access to asset allocation models that help you build a biblically responsible portfolio because it's not very widely known out there about how to invest in a biblically responsible way. For most people, it's never even occurred to them that they could be supporting the very things that they're praying against as a Christian, like abortion, pornography, the LGBTQ agenda, human rights violations, all of those things that plague humankind, the sin that is so prevalent in our world today that we're praying against. We're praying against all those things as Christians. And for a lot of people, they don't even realize that they may be financially supporting these agendas in the way that they invest. So when you're an owner of a company, even if you just do mutual funds or ETFs, those are made up of individual companies. And when you own a company, when you own shares of a company, you are entitled to your share of the company's resources, their profits, whether they are buying back their shares or paying dividends or things like that. But you don't get to make the day-to-day decisions on how that money is deployed. You trust those decisions to the management of the company, to the CEO and the C-suite and the management that executes a business plan. And you've invested in that company because you believe that there's a good chance that you will have value returned to you as a shareholder. You don't really expect that these companies are going to fund the things that are opposite of your values as a Christian. Then when you find out, you have some decisions to make. With knowledge comes responsibility. So beware if you continue to listen. If you go to our screening tool and you screen the investments that you have, there will very likely come a sense of conviction on your heart, much like happened to me. And you'll have to make a decision. Do you want to keep doing things the way that you're doing them, or do you want to make a change? Then you can consider becoming a partner with us in managing your own biblically responsible portfolio. So you don't have to worry. We're never going to give you suggest funding those agendas that you don't agree with as a Christian. And if they start, we'll bring it to your attention and ask you to sell them. So that's all about defunding darkness is what we call it. And I know we kind of harp on that a lot, but folks, I want you to be able to articulate. So if you're listening for the first time, maybe this is new to you, but if you've been listening for a long time, you've heard defund darkness and fund the light so many times. But as you have opportunities to share this information and these strategies with other Christians, we want you to be able to articulate it well. So funding the light is about being a joyful and generous giver. So there are a lot of great opportunities out there. We can't all go to the ends of the earth to make disciples of the nations. We can't maybe go on mission trips or things like that, but we can send our money to do that and to support the people who have devoted their lives full-time to ministry. And so we have a couple of opportunities. We use the megaphone of Financial Issues to promote ministries that we think are doing a good job in funding the light. So you are all familiar with Preborn Ministries if you've been with listening for a long time. So we now have another opportunity with Crossroads Kids Club. So while Preborn focuses on saving the lives of babies, we focus the Crossroads Kids Club focuses on reaching young kids, elementary school kids, K through 5th grade, in public schools. Yes, that's possible. They can go into these public schools. They have an after-school program that they set up with the help of, they partner with local churches in communities, and they meet once a week after school. They do activities with these kids, and more importantly, they get a chance to share the gospel message with children and help them come closer to making decisions for Christ. Issues.org, and I believe at the top now we have a banner for the Crossroads Kids Club ministry, and you can check that out.
Yep, it's awesome, Shana. Hey, speaking of important things going on here, you had mentioned earlier that you voted and got the cool voting sticker. I think a great combo would be if you wear that voting sticker on your Spineless Weasels t-shirt. When you make a donation to FISM and get your Spineless Weasels t-shirt. You might not be able to get it in time for Election Day, but you still got to get your Spineless Weasels t-shirt. It's a great piece of apparel to wear as you exercise your right to vote. So just want to make sure that folks knew about that.
Yeah, you can have your I voted sticker on the front to prove that you weren't a spineless weasel, but you actually got out and voted your values, and then be able to explain that slogan to other people too. Yeah. We're frustrated with Washington.
Absolutely.
For sure. We're frustrated with politicians.
Absolutely. And I also forgot to mention that we'll throw in a nice Spineless Weasels tumbler too. So you can, drink your water and celebrate the removal of spineless weasels. Good stuff.
Awesome.
Yeah.
Good. So we've had a lot of takers on this. So hopefully I didn't wear my Spineless Weasel t-shirt to go vote. I forgot to do that, but
that's okay. That's good, Shana. Shana, I don't know if we'll have time to get to Dallas. It's going to be close to the Ag. If maybe you want to try to get to one of these partner questions here while we're waiting.
All right, let's do that. And then let's get Dallas after that.
Yeah, sounds good. We'll do Bonnie is 71 saying, husband and I each have a Roth IRA. I have a traditional IRA, a rollover from a former employer. We want to have a regular investment account. All are with Fidelity. If I want to move some of the stocks, mutual funds, ETF, or cash in my traditional IRA to the regular investment account a little each year to avoid paying all the taxes once we die, what type of investments are the best to move? And I'm still part-time. Assume part-time employee.
Sorry, I missed that last part. Could you repeat?
Sure. Yeah, absolutely. So Bonnie's just saying, what type of investments are the best to move from the traditional to a regular IRA account?
All right. So now Bonnie's pretty clear on this, but you do have to pay taxes when you move that, even if you move the investments just in kind that we talk about a lot is, we think taxes are going to be higher in the future, so to take advantage now. The type of investments that are best to move are going to be, start with your most tax efficient investments. So if you have some of the ETFs that are part of our strategy, not ETF 7, but if you have any of the others, you could consider moving those out because they have sort of a tax beneficial treatment. Even on the outside, you are less subject to the capital gains there. And then you could start to move your higher growth investments out. Yes, you may have to pay some capital gains if you make money on the outside, but it's better, I think, than trying to keep the money in there and paying high taxes on it all later. Well, here comes Craig.
This is Craig Haugaard with your Financial Issues Ag Update for November 1st. Corn had very good weekly export sales numbers, but didn't really respond to those numbers. Traders seem to be more focused on South America, where the weather continues to be non-threatening. The Buenos Aires Grain Exchange reported yesterday that improving profit margins and declining leafhopper infestations could push Argentina's corn planting beyond the projected 6.3 million hectares. At the closing bell, December corn was 0.75% lower at 4.10 3/4. Soybeans pushed higher as they're led by good export sales and higher soybean oil prices. If there was a fly in the ointment, it was that spot soybean meal futures closed below $300 a ton for the first time in 4 years. South American weather continues to look favorable for planting progress, with Mato Grosso taking major steps to get caught up with the average planting pace in the last week. At the close, January beans were 3.25 cents higher at $9.94.5. Wheat markets were on the defensive for most of the session as traders seemed to be comfortable with world supplies, improving improving weather scenarios and the upcoming wheat harvest in the southern hemisphere. As a result, Minneapolis December wheat was 4 3/4 lower at 6.04 1/4. Kansas City declined by 6.5 cents to close at 5.69 1/4. And we had Chicago dropping 2 3/4 cents to close at 5.70 1/2. Cotton futures continued to just chop sideways. At the closing bell, the December futures were down 28 points as we closed out the day at 72.45. Livestock futures all gave up some ground. December live cattle were 12.5 cents lower at $186.30 per hundredweight. January feeder cattle were 65 cents lower as they closed out the day at $241.32.5 per hundred. And we had December lean hog futures dropping by 57.5 cents, ending the day at $83.80 per hundredweight. Class 3 milk futures act as if they're trying to put in a pricing floor here. At the close yesterday, we had November futures down 12 points as we closed out the session at 20.12. This has been Craig Haugaard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
I was sobbing. It was a cry for prayer for God. I'm so sorry, please. So I got on the internet and I just started seeing like abortion pill reversal, and I found a hotline number. We're gonna get this started, and it's gonna seem like a lot, but it's gonna be so fast, and it's because you only have a certain amount of time left. It's gonna be okay. We got this. We're gonna try to fix this for you and make sure you know you're good and the baby's good. Don't worry. And when I came here, my heart was so warm. Other than Planned Parenthood, where I was very cold and I was lost, and I just felt like I could have been, it was just terrible. And to know that Compass Care could tell me something different and could reverse a medication like that, that's amazing. That somebody would go as hard as if it was their children to make sure your child is gonna be alive and stay safe. So I want a lot of people to know it's possible. You can save your baby. You can reverse that abortion.
Is inflation, national debt, and volatility in the markets causing you anxiety? Well, you're not alone. I'm Shana Burt, host of Financial Issues, a nationally syndicated, biblically based program. During our daily program, we help you navigate the current financial climate and provide valuable insight so that you can be a good steward with the money that God has blessed you with. The Bible tells us not to worry and to seek wise counsel, and that's why Financial Issues is here.
Join our partnership community by visiting financialissues.com.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
Welcome back to Financial Issues. It is Rapid Fire Friday. We've got a caller in the queue. We're going to get to that. And we've got room for at least one more. So if you've got a question, 610-363-1110 is the number. If you're following along on social media, you can also, if you're too shy to call, maybe you can post your question there in social media. We're on Facebook, YouTube, Rumble. We're streaming live on all three of those. You can also find us on Instagram, X, and Truth Social. So if you're a social media kind of person, do all the things that you do on social media, like us, subscribe, follow us, share us.
Yep.
That helps us to get in front of more like-minded people.
And Shana, I've been told if you do smash that subscribe button, it actually has a greater effect on social media, so smash it. Do me a favor.
There you go. I'll let you say it. I hate saying that. I'll let you say it.
Smash that subscribe button, folks. See that? There you go. We just blasted out to a couple more million people. That's right.
There you go. That's right. That's right. All right. Let's get to that caller. We've got Dallas has been waiting so patiently. So Dallas from Texas, what's your question?
Hi, Shana. Full disclosure, I'm not a partner, but my question is, when a CD comes due, do you reinvest the principal and the interest, or just the principal? Now, to make it a partner question, if it is just the principal, what would you do with the interest?
So it all depends on what your personal needs are. So if you've invested in CDs because it helps to supplement your income, then you spend the interest. If you don't need the money, maybe you just let it go into your cash. But, I guess at the cost of self-promoting our strategy, when you are a partner and you do have the asset allocation, the portfolio tracker, you're able to put all of your assets in there, and it gives you a real neat printout. It gives you, or output, a bar chart, and it shows you, the different categories. So CDs fall into fixed income, and, once you pick the model that you're going to follow, it tells you what percentage of your portfolio you should have in each sector. So when your CD comes due, it's no longer a CD, it's in cash. So you, make that change on your tracker, and then the output in your tracker tells you exactly where you need to go. So it really, there's not just a hard, fast answer to what you do with the interest, and do you reinvest the proceeds? It really is all about asset allocation. And so, if you had everything perfectly balanced and you had a CD come due, everything else staying the same, you would then be overweighted or have too much money in cash and not enough in fixed income. So then that would necessitate that you get another fixed income investment. And if you like the CD option over the other fixed income options, then you would just reinvest it there. But let's just say that, maybe your other investments decline in value, right? And your CD comes due. Now, maybe even with the CD coming due, you're perfectly allocated in your fixed income sector. That means that you're going to be light somewhere else. And, conventional wisdom for investing says buy low and sell high. Now, it's hard for people to invest money in investments when they're down. But if they're down for not the wrong reason, you can potentially make a really good investment decision there. So following that tracker really helps you to keep the emotion and kind of the guesswork out of where does that money need to be deployed.
Okay.
Makes sense?
That actually makes sense. Yeah.
Good stuff. Well, thanks for calling. We appreciate your question today.
Great work, Dallas.
Thank you. Have a great one.
Thanks.
You too. Bye-bye.
All right, 610-363-1110. I would say if you can get that number dialed in the next 30 seconds, we'll get you in. We'll be able to get you in today.
That's right. After you smash that subscribe button.
That's right.
Podcast platform. Shana, it was neat to hear Dallas, who is not a partner but is still trying to deploy that surplus that she gets. Well, that's exactly what we want, folks. Like right. You're always thinking strategically about where you want to put the money that's coming in. It's good.
Yeah, and it really does. Our strategy, it's not super complex, but it's good. It's worked for a lot of people. I've seen it personally work. I'm in private practice, and I've built, hundreds of portfolios for clients following the strategy, and I've seen it work time and time again.
Yep. It's good stuff. Over on Ask Shana here, we've got Gary, Shana, 64 years old, saying, my wife and I just became FISM partners. Gary, welcome. Good to have you. Welcome. Says, your alerts of August 5th and 8th suggest a heavy cash position. We're employing that strategy, but we're wondering if you can recommend any specific money market accounts, CDs, etc., to park our cash in. Additionally, in August, we started investing with a certain mutual fund group. Do you recommend staying in that group or selling? We're currently up almost 3% overall. What do you think? Around 2.79%.
Okay. So what I would do, I don't go into all of the different platforms and look at all of their money market funds. What I would say is just find a list of the ones that they have available to you, and maybe you have to use their customer support in order to do that. And I would say just pick the fund that has the highest yield on it for your cash part. As far as CDs go, there's a huge inventory of CDs. So, if I said, there's this particular CD, it may not be available on your platform. It may only be available on my platform, but there's typically a lot of inventory in all of the brokerage platforms to get, or the CD maybe, there's limited quantity that's issued. It may be gone by the time you get around to doing it. So there's usually a search feature whenever you go in to buy CDs. You can put in certain parameters. If you're building that ladder, which, our strategy for that has sort of shifted. So make sure that you read the commentary on the fixed income page there, and only get those CDs if you can get over, I would say, 4.5%. As far as, and he mentions the Schwab mutual funds. So I think maybe there's been a little bit of a misunderstanding there. So we recommend that partners open accounts on discount brokerage platforms. Schwab could be one of them. There's Vanguard, there's Interactive Brokers, there's Fidelity. But the mutual funds that are run by those companies are typically not biblically responsible. We are only suggesting that you get the platform to build your own portfolio and stay away from their mutual funds because they're not biblically responsible. So Schwab, Vanguard, they don't have the same philosophy that we have here at Financial Issues, that we need to screen our stocks, our mutual funds, and our ETFs to avoid companies that are contributing to moral decay and values that are opposite of the Christian faith. So I would not be looking at those mutual funds. And then you also have to be careful. A lot of the discount brokerage platforms, they will offer a help desk, but a lot of times they're willing to offer more help than you're asking for. So a lot of times they'll offer to put you in touch with, an advisor that can help you do that. We are not recommending that because, and you can ask them. You can ask them if they know what biblically responsible investing is. And I'm going to suspect that even if they do know, they're going to try to talk you out of it. So, I would avoid those funds. If you want to do mutual funds, look at the ones that we have on our platform because those are biblically responsible.
Awesome, Shana. Dorothy's up next here. She says, we're wondering if we should begin transferring my husband's 401k. He's 70, not ready to retire. There's around $800,000 in the account now. Dan had talked about moving a traditional IRA and paying the tax on it. Did I understand correctly that tax on a 401k transfer would increase over time, so we shouldn't worry about paying the tax now?
Well, I do believe that taxes are going to be higher in the future than what they are today. And that was the premise that Dan operated on as well. So if taxes are higher in the future than what they are today, you would want to pay the lower rate today. Now, you have to be strategic in how you do this because, if you did it all in 1 year, adding $800,000 to the income that you already have is going to put you in one of the highest tax bracket, which makes this strategy sort of counterproductive. So you may want to consider doing part of it. Now, at 70 and a half years old, you no longer have to take RMDs at 70 and a half. He probably is going to have to take them at 73. I will say this, that leaving it in the company plan can potentially, if he's still employed, can potentially delay those required minimum distributions. But again, what we're trying to do is reduce the amount of money that's going to be subject to taxes at a future, what we think is going to be a higher rate. So it's a great idea to start looking at some outside options, and it's not necessarily an all or nothing thing. He can roll over a portion typically if he meets the criteria for his retirement plan, and he can start to then become biblically responsible and start to learn the strategy. So I think it's a great thing to consider. Well, folks, we're at the end of the program today. We hope that you have enjoyed it. We hope that you learned something, and we hope that we could encourage you in the Lord. Have a great day of worship on Sunday. Come back next week. Lord willing, we'll be here to remind you time's getting short. The Master is coming back, and we want to be here to help you be found a good and faithful steward with all of the assets you were trusted to manage. I'm your host, Shana Burt. We'll see you next week on Financial Issues.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.